We all do our own personal financial checkups, right? We look at our savings, our debts, see how we're doing. But have you ever wondered if you could do that for the entire country? Like, pull up a single giant balance sheet for the United States that shows everything we own versus everything we owe? Well, it turns out we actually can. And let me tell you, the results are pretty fascinating. So let's get into it. And we can do this because, believe it or not, every single quarter, the U.S. Central Bank, the Federal Reserve, does exactly that. They're kind of like the nation's head accountant. They go out and gather up all the numbers from every single corner of the economy to create this incredibly detailed financial snapshot for all of us. So that brings us to the million-dollar question, or I guess the trillion-dollar question. When we look at this latest financial report card for the entire country, what does it say? How are we actually doing? Are we getting wealthier as a nation, or are we just digging ourselves into a deeper and deeper hole of debt? All right, to answer that, we've got to look at the official report the Fed puts out. This is where all the data we're about to go through comes from. It's officially called the Financial Accounts of the United States, but insiders just call it the Z1 report. And honestly, the best way to think about it, it's just like a massive balance sheet for America. Super simple. On one side, you've got all the assets. That's everything we own. And on the other side, all the liabilities. That's everything we owe. Okay, so let's start with the good stuff, right? Let's look at the asset side of that balance sheet. We're going to kick things off by checking in on the financial health of American households. And wow, the top line number here is just staggering. As of the end of 2025, the total net worth of U.S. households topped $184 trillion. Yeah, trillion with a T. That is an all-time high. So, how in the world did we get here, to this record high? Well, this chart here tells the story of the last couple of decades. That big, colorful stack you see growing, that's all of our assets. Real estate, stocks, savings, the whole shebang. And that little red sliver at the very bottom, that's our household debt. The main thing to see here is just how much that asset stack has absolutely skyrocketed compared to our debt. So what's actually in that massive pile of assets? Well, if we break it down, a couple of things really pop. First, corporate equities, stocks. That's the single biggest piece of the pie at nearly $68 trillion. And right behind that is real estate, coming in at almost $48 trillion. So when you put them together, the stock market and the housing market make up the huge majority of household wealth in the U.S. It really shows you how tied the financial health of most families is to how those two things are doing. And this wealth isn't just sitting still, it's growing and fast. Get this, in just the last 3 months of 2025, household net worth shot up by $2.2 trillion. But how it grew? Now that's where the story gets really interesting. This chart right here is perfect for seeing what happened. It breaks down that growth and shows this real push and pull within our net worth. So each bar is a single quarter. Anything above the line added to our wealth, and anything below it took away. It's an awesome way to see the tug of war that's always happening between our different assets. And in this particular match, the clear heavyweight champion was the stock market. A really strong run in stocks added a whopping $1.6 trillion to our collective wealth. Again, that's in just 3 months. And it wasn't just stocks. Americans were also saving more. Our deposits and money market funds grew by another $600 billion. Okay, but here's the twist. While stocks and savings were going up, real estate was actually pulling the other way. The value of our homes, believe it or not, went down by $400 billion. And that just goes to show you how incredibly powerful the stock market's influence was. The gains there were so huge that they more than made up for the dip in housing. All right, so that's the asset side of the story. Now it's time to flip the page and take a hard look at the other side of the balance sheet, the nation's debt. The big number here is nearly $81 trillion. That's the total for what's called non-financial debt. Now, that's just a fancy term for the core debt that fuels the economy. So think mortgages, business loans, car loans, and all the government borrowing. But a number that big is kind of meaningless until you ask the really important question: who actually owes all this money? And this chart is so revealing. It doesn't just show you the raw debt number, which can be misleading. Instead, it shows you the debt as a percentage of our entire economy, our GDP. And as you look at those colored layers, one thing just jumps right off the screen, doesn't it? That big blue chunk at the top, that's federal government debt, and it's just been growing and growing as a piece of the economic pie. And if we look at the actual dollar amounts, it's crystal clear. The biggest borrower, and it's not even close, is the federal government. They owe almost $34 trillion. After that, you've got businesses at 22 trillion, and then households right behind them at just under 21 trillion. State and local governments, they've got the smallest tab to pay. So what we're left with is this kind of strange picture, right? We have record-breaking wealth on one hand and record-breaking debt on the other. To really make sense of this, we need to add some context. It's not just about how big the numbers are, it's about how they stack up against our ability to actually handle them. Now, this next chart is absolutely key to understanding the wealth side of things. It takes our total household net worth and compares it to our disposable personal income, which is just the money we have left over after we pay our taxes. Think of this ratio as showing how many years of our take-home pay we have socked away in assets. And as you can clearly see, that ratio is sitting near an all-time high. In plain English, that means the average household has a pretty substantial financial cushion right now. Okay, so let's use that exact same logic, but apply it to the debt side of the equation. Yeah, $21 trillion in household debt sounds like a lot, but how manageable is it really? And honestly, this next chart might just be the single biggest surprise in this whole report. It compares our total household debt to our take-home pay. And just look at that massive drop since the peak back around 2008. The takeaway here is huge. Even though we owe more actual dollars than ever, our ability to manage that debt, when you compare it to our income, is actually the strongest it has been in more than 20 years. So when we put it all together, our national checkup reveals this incredible paradox. On one side, American households look like they're in a really strong financial position. They're wealthier and have less debt relative to income than they've had in years. But on the other side, the nation's overall balance sheet, which is getting dragged down by massive federal borrowing, is heading in the complete opposite direction. And that leaves us with a really critical question. How long can those two things coexist? How long can a country's financial picture look so different from the finances of its own people?